Hey traders, it's Trade90X. Today is the 29th of June, and we'll be going into a new week next week, July. Hope everyone's having a great weekend. Hope everyone had a profitable week. And again, let's get to it. Again, I really love doing these Trade90X weekly reviews. Again, routines are a big part of our success here at Trade90X. It's, doing our pre-market, live market, doing our post-market for journal and review. And then, of course, each week we do our weekly review, and then we do our monthly and yearly reviews. So these are all things that are part of our success plan if you want to really build true wealth through trading. Now, again, every morning we go through the same things. And again, I can only talk for Trade90X, but these are the things that we do, rinse and repeat, that work for us. And again, we created the Earn the Right to Trade Live strategy, exactly what it sounds like. You've got to earn the right to trade live. And again, here, we look at things every day. You have to know your why. Less is more. Your strategy. If it doesn't have a statistical edge, why are you using it? It's always about the rules of engagement, how markets work, who controls the markets, the banks, not retail investors. Overall main trend versus short-term trend. We like to use mostly the indices to really figure out that main trend versus short-term trend. Again, after we understand context, then we can look at the symbols that we trade. And again, I want to trade symbols that are in sync with the overall main trend for the highest probability. And then, of course, our back test, and this is where you're going to build a statistical edge over a body of work. Again, I want to be the casino over a body of work. I know my strategy has a real edge. If you're not trading with edge, then you shouldn't be trading at all. Numbers, you have to know your numbers. In business or fail. In business, you have to know how to, again, if you don't have numbers, you're not going to be able to scale your business, and it's also going to help you preserve your capital. I don't go into any business unless I know my numbers, and you shouldn't either. Now, when we're talking about numbers, I'm talking about active trading. Here at Trade90X, I give it to you every day. We don't risk more than 0.5 to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital in any one session. And we focus on a minimum risk reward of 2 to 1 and higher on our trades. Market context, again, markets can only go bullish, bearish, or range. Who has the control? Time frames, main trend comes from your monthly and weekly, and then our short term usually will be anywhere from a 5-minute to a daily chart. And when we talk about main trend, again, if the main trend is up, the highest probability is getting in sync with the short term and main trend going long. If the main trend is bearish, the highest probability is looking for those pullbacks in the shorter term trend to get in and get in sync with the main trend bearish. Now, anything besides that is called counter trend trading. So it means if the main trend is up and you're trying to go short, that's counter trend. Now, there is a time and place for it, but I would say this, the majority of your trades should be going with the trend. The only time I consider counter trend, if you're someone like myself who has been trading for quite a bit of time, you've mastered the Earn the Right to Trade Live process. You've also understand that counter trend is lower probability, but you've also back tested that you prove you have an edge. If you haven't done that, then you haven't earned the right to even consider it. Are we clear? Cool. Statistical edge setups. Again, price can only go bullish, bearish, or range. It's understanding those when you have a statistical edge. And again, if you're part of the Earn the Right to Trade Live process, we go through this stuff every day. And then mastering those entry, stop, and targets, order types. Everything is planned in advance. We don't leave anything for chance. And then, of course, daily routines. We just talked about that, our pre-market, live market, post-market. And today we're doing our weekly. And then again, we have a set of odds enhancers. Just go through that. This one page is always our trade plan right here. Make sure you snapshot it. And again, if you have questions, you hit us up at hello@trade90x.com. While it lasts, go to our Trade90X Instagram page profile and book a 15-minute free call. Ask us anything about trading. Also, go to our Trade90X YouTube channel. Again, you guys asked me. So what I'm going to be doing over the next few weeks is doing more videos on the Earn the Right to Trade Live, breaking down each step. So look out for those. And also, I always recommend having at least 6 to 12 months emergency funds before trading. And then here are some books that I just picked out that, again, snapshot this, that I think will be helpful for someone who's, really serious about their trading. All right. Now that we have that, let's go see what the let's see what the week brought and what we can figure out moving into next week. Now, remember, next week is a short week. We have July 4th. Volumes will be a little bit lighter, so many people might be taking next week off. If you are going to trade, just again, nothing changes, same routines every single day, and we break it down, but we do understand that next week volumes could be a little bit lighter. All right, first thing I'm going to do, always we're going to check the news. And again, Thursday, July 4th falls on there. Friday will be a trading day, but again, I think the majority of the volume will be vacationing next week, but we'll see. Like I said, we have important news. We have ISM Monday. You have Powell and jobs. You've got ADP farm, non-farm. You've got unemployment claims, ISM. You have FOMC. So again, even though it's a short week, we definitely have Tuesday and Wednesday, and Monday, Tuesday, and Wednesday are going to be important information. I won't be trading Friday, but it is important information. So if you are, just be aware. Like I said, it'll be a short week for me. I'll probably trade Monday, Tuesday, and then I'm going to take the rest of the week off. So again, I'll be back with you on Monday and Tuesday, and then be off for the rest of the week. But all right, let's jump into this. Again, we do the same thing every day. It's about the same information. I look at the same. So why? All I'm trying to understand is who has control. Is it bullish, bearish, or range and decision? And then do I have a statistical edge set up that we can take? And again, every day is going to be different. Some days there could be, 5 setups. Some days there could be 1 setup. Some days there could be none. Okay. Less is more for us. Okay. Less is more for us. We're more specialists. We trade the same symbols over and over. Right. Keep it simple. And this is the information we feel helps us figure out quickly who has the control. So we just look at the news right now. In the short term, we're kind of in that neutral to fear. So it's kind of an indecision right now in that short term, which is the data showing us. Barchart.com. Again, I'm going to go to stocks, market momentum. I'm going to scroll down here. And again, this quickly can show us the main trend versus short term based on moving averages. So these are all the stocks in the market. Based on the 200, we're still bullish. The short term has been going back and forth. So the short term is not what I would call clearly in sync with the bullish main trend. Okay. Next, FinViz. Again, Friday, Dow closed below the open, bearish. So did NASDAQ, so did S&P. Russell was the only one that was bullish. So again, we had more of a bear bias to close on Friday. Go to Group tab. And again, I use the sectors to also help us. What is the main trend? Well, the year, half year, 3 month, still bullish. Short term, definitely indecision, meaning that we're going back and forth. It's not, we don't have clear vision between the short term and the long, the main trend. So what happens for me when I have that, I will just be using my scalper day trading strategies, because last thing I want to do is be looking at bigger trades when the short term and the main trend are not in sync. Are we clear? Cool. All right, tradingstir.com. Again, this comes out every Friday. And the reason it's so important is this site does it for free. They do a great job. The commitment or trade report is basically your smart money, your banks, your institutions. They control 85% of the order flow in the market, not retail traders. So it's very important you know this information. And again, I look at the indices starting with the S&P, and I don't really give a crap what someone tells me on CNBC or on YouTube. Again, here at Trade90X, if you're part of our community, we give you the facts, not fiction. I give you actionable information on how to do it every day. Again, it's rinse and repeat. And these are the things that can show you the facts, who has control, bulls, bears, or is it indecision? Right now, long-term trend, main-term trend, bullish. It's 86% bullish versus 13% short. So until we get a personality change in the main trend, the highest probability for me is always going to be looking for those dips to enter, to look to, re-enter the main trend. And as I said, there is a time and place for some counter trend trades, but if you are not somebody that is a profitable trader, you're not somebody that's mastered the process, you're not somebody that's taken the time to back test that counter trend has an edge using our strategy, then you have no business even trading with it. You should be focusing on the trend and how do I get in sync with the main trend using the short-term trend every single day. All right, stockcharts.com. Again, I love this tool because I can quickly show you the main trend versus the short-term trend. And again, as I talk about, these are the symbols that not only do we trade these, but these are symbols that we feel make up the market context that can tell us best who has control, bulls, bears, or range. And I've got Dow, S&P, NASDAQ, FTSE 5000, NYA. I've got Apple. And then I have my odds enhancers, the VIX, 10-year, and the dollar. And then up here also I've got some commodities, gold and oil. And here at Trade90X, we will actually either trade them with futures or with options, or the third choice is just trading shares. And again, when you're part of the Earn the Right to Trade Live process, we help you determine what's best for you as a trader. Remember, it's not one size fits all. It's what's best for you based on your time, personality, and resources. Are we clear? Good. Because too many traders come in and just try to open an account and trade, and then they blow up their account and they can't understand why. You got to understand what is your why and what is my edge before you can even consider trading. Are we clear? Thank you. All right. All right, so here's your main trend right here. Remember, bullish is lower left to upper right, bearish is upper left to lower right, ranges equal highs equal lows. Right now, all the indices are moving lower left to upper right. That tells us we're bullish. If we look at the VIX, which is probably my most important odds enhancer, the volatility and sentiment, if it's moving down, that helps the bullish market. If the VIX is moving up, that is bearish. And if it's sideways, it tells us we have more indecision. Now, right now, you can see still coming down. The only thing that does concern me is we're getting down to the low part of the curve. So we'll keep an eye on that. All right. Let's go to, one other thing, ranges. So you see Apple right here, ranges. It was equal highs, equal lows. So whenever you see that, we box the area. Now, if a range is part of your statistical edge, I never trade the middle of a range, and I look for obvious. Now, remember, bullish, bearish ranges. I don't care if it's a 1 minute, 5 minute, weekly, or monthly. The only difference is how long you hold the trade, the time frames, but same. Now, weak, the ranges, bottom third, if we get bullish rejection, high probability long. Top third, if we get obvious bearish rejection, is short. We never trade the middle, and we play a range until now. You see how now it's broken back to bullish momentum. All right. Let's go look at the short term. Remember, main trend is up. What do we look for? We look for the highest probability trades, or to look for those pullbacks to go long. And the more obvious, remember, lower left, upper right is bullish. Upper left to lower right is bearish, and equal highs, equal lows is bullish, is a range, sorry. So the more obvious, you see how beautiful SPX, the NASDAQ, FTSE 5000, and Apple are? That's money making right there. When you see lower left, upper right, we look for those momentum into pullback and pauses. So if you look at like the Dow and NYA, unfortunately, they've kind of in a range, kind of indecision. I don't want to trade that. That's losing money right there. All right. Now we're looking at the VIX, and the VIX is kind of sideways in the short term. This is what I was telling you. I really want to see it either bullish or bearish. So what this is telling us in the short term, we have some indecision. Okay, so we just got to be aware of that. Once you understand how to do what I'm doing, it just gives you such an edge because you can come in with such clarity. Okay, the main trend is up. The short term is in sync with the main trend, or we have indecision. So this is what I'm going to be looking for. Based on what the overall market context is. All right. So it's not rocket science, but it takes a lot of work to understand. All right. So next, once we have that, now I can go right to the chart. So remember, I'll always start with the S&P. Your main trend is your monthly and weekly chart. And your job is, I don't care what time frame, is to figure out, are we bullish, bearish, or range? And just understanding the monthly and weekly would be your main trends. And usually 5 minute to a daily is going to be your short-term intermediary trend. All right, so here we go. Lower left up right is bullish. I have a short-term momentum band. This helps a lot of newer traders. And I've got a 200. So checklist. Are we moving lower left, upper right? Yes, we are. Is this the short-term momentum band sloping up? Yes, it is. Is the short-term momentum band above the 200-day moving average that's sloping up? Yes, it is. Well, then that's high probability bullishness. Once I understand that if we have high probability bullish, bearish, or range, now it gives me an opportunity to really have focus on what we want as a trade. For me, I look at momentum. I don't care if this is a 1 minute or weekly. I look at the momentum into pullback or pause. And again, as I mentioned, if we have that sloping short term above a sloping long term, and then I'm looking for engulfing candles, pin bars, or dojis into those for the highest probability at or above. And the arrows are here to basically show me where the highest probability trades took place right here. Again, this is a weekly chart, so this would be for more position trading. This is months to years. All right, so now we go and look at the daily chart. We ask the same questions. We take these off. And again, are we moving lower left, up, right? Yes, we are. Do we have a short-term sloping band? Yes, we do. Up. Is it above the longer-term 200? Yes, it is. That's the high probability, a higher probability long. And all I look for is I look for momentum into pullback or pause at or above. And here we had sort of an engulfing and pin bar right there, double doji into engulfing or into pin bar, and now we're in a sideways range. So right now, there is nothing to do until we have more clarity. Okay, I look for, remember, price moves from whatever you want to call it. I call it bullish momentum into pullback or pause, and it either goes back to bullish momentum or we break down. So right now, what I'm waiting for here, I like to trade break and retests, higher highs, higher lows. Those higher highs, higher lows, momentum into pullback is where we look for our trades. And if we start doing this, then we could start have again, more of a personality change, or we could literally just rattle around here for a while. All right. Again, it's not rocket science, but it takes, listen, you have to understand again, when you're part of the Earn the Right to Trade Live process, number one, what is the rules of engagement? Am I back tested to have an edge? Do I know my numbers? Again, have I mastered bullish, bearish, and range price action where on any time frame? Have I mastered my high probability statistical edge setups? And then using my odds enhancers, like the tools I'm going to show you, which I show you every single day. And again, this came from you guys asking me to simplify things and saying, listen, if I have 1, 5, 10, 15 symbols, I want to be able to come in pre-market and post-market, check those symbols quickly, determine, what the main trend is, and find the symbol that helps me with the tools identify getting in sync with the main trend short, going long. And if I'm going to counter trend, I've back tested with an edge, and the tools can help me, determine if I have a high probability. So let's go through that. Number one, always. So the tools are the following. These tools are all predictive, not lagging. They can be used entry, stop, and targets. They're off the shelf. They're here before you come in, not after the fact. And they quickly tell us if we're bullish, short-term, bearish, short-term, range, or no price action. So we got the yearly high-low in gray, the monthly high-low in orange, the weekly high-low in purple, and then our short-term previous day's range high, low, you have the midpoint in red, you got the open in blue, and here's your previous day's close. Okay, now, whenever you have a weekly, monthly, yearly, either on top of the previous day's high, low, or high, or close by, these can be used, again, like right here, you see here, this tells us that the levels even, or we just turn it into a zone, and it tells us it's even, stronger. If we break above and below, I'm always using the weekly, monthly, and yearlies as very high probability targets. Okay, so this was, again, the market's closed right now, but this was Friday's action. So again, the setups that we look for are the following. Number one, if we're above the previous day's range high, I'm looking for higher highs, higher lows. Okay, what happened here, I'll show you that in a second. Or if we're below, I'm looking for lower highs, lower lows. And again, above with bullish price action, that's strong bullish momentum in the short term. Below, lower highs, lower low is strong bullish momentum to the bearish side. Anything inside the range tells us it's a neutral bias day. It tells us buyers and sellers agree on price. Remember, ranges, bottom, middle, top. I have no interest trading the middle, and I want movement. So above or below, I'm looking for clear momentum into continuation. And inside the range, I'm looking for momentum into rejection. And I'll show you that right now. So like right here, I want strong momentum, rejection, top third, and then I'm looking at the middle or bottom of the range. If we go down to the bottom, I'm looking for strong momentum to get a rejection back to the middle or top. And then like here on Friday, it looked like the bulls had control, and then we got the fake out breakout. That means that the buyers couldn't hold it, and it came back into the range, and you had a setup short right here, and then this would be what I'm looking for. Now, remember, the beauty of this is if it's above or below, you know that short-term it's bullish, short-term bearish. If it's in the range, we know that it's range price action, that buyers, sellers, and agree, and we know the setups, top third, bottom third, fake out breakouts. Now, the S&P, the main trend is up. So the long term, if we have a long trade, definitely that is going to give us the higher probability trade. But so right here, the overnight traders had longs right here. We went from inside to an outside bullish day, and look what it hit. It hit right into that target on Friday. Beautiful, which was your weekly, monthly, and yearly. So you knew that level was strong. And then we've got right here, we got another bullish trade right here, right after the open right here. Let me take this off right here so you'll see it was green. All right. So there was your trade right there. Let me go down to 5 minutes. There was your trade right there. Either the engulfing or right there, the doji into the pin bar. That was your setup, and there was your target right there. And again, if you're somebody that trade, now remember, we trade, just remember, let's be clear, we come in between 7 and 8, we build our plan. 8 to 12 is where we usually like to trade because of the momentum and volatility, but we never trade into news. And then once we're done, we journal and review. Now, some of you have in your plan that you like to trade the afternoon. So if you did, and you can, I'll say it again, if you understand the tools, you're a profitable trader, and you've taken the time to back test that counter trend does give you an edge for the shorter term trades, then you had a trade right here. But this was the trade. Remember, all you need is one good trade per day and you're done. You don't need to be trading 2, 3, 4, 5 times. Get a great trade in, and you know what? You're done for the day. Move on, evaluate, and then move on. That's what we, preach. Again, it's been proven. The more that you trade, the more likely you're going to end up losing money. All right. So that was the S&P. Now let's go review all the symbols, and then I'm going to show you the process here. So let me just take this off. So now when we get to the Earn the Right to Trade Live, this is called our one chart view. We can quickly determine and do, again, once you learn this, I'm taking it slow because we're doing the weekend review, but once you learn how to do this doesn't take more. I'm telling you, you can be in 10, 15 minutes, you can be quickly reviewing this stuff. All right, so again, we understand the rules of engagement. We understand who controls the markets, main trend versus short term. We understand the importance of our numbers. I gave you the numbers. We understand the importance of back testing to prove we have an edge. That's what allows you to earn the right to trade live. You have mastering of what bullish, bearish, and ranges are. The setups now using the tools. And now let me show you the 3-step process. Number 1, we go to the weekly so we can determine that main trend. All right, this process allows you to trade whatever you want, position, swing, day, or scalp. Number 1, lower left to right, we are bullish. Next, Within that step number one, I take a red horizontal line. We call these decision points. And what I'm looking for is it's obvious on the chart where we had red and green candles where price paused and took off. Right here and here are the most obvious. We call these decision points that come from the monthly and weekly. And I do this every morning. And then I go to step number two, go to the 30-minute. And again, you'll see those decision points in. We have our previous day's range, weekly, monthly, yearly high to quickly help us determine, are we bullish? Are we bearish? Do we have a range or do we have no edge? So this yellow line is where the week starts. And we can see that this week right here, it's kind of a sideways. And what I'm looking for is I'm looking for those big movements. What I'm not looking for is this. Okay, when you have sideways chop like this, I have no interest in trading, and you shouldn't be either. All right, so let's go to the 5-minute chart. This is step number 3, so we can get a little more structure. And let's go see what the week brought here on the ES, because we're doing the review. So for me, right here, I'm just going to put the arrows here. Wherever we have movement was a range day, and we had a bottom third trade here. And if you're somebody that, again, I've given you the rules for counter trend trading, this was an opportunity. Monday, Tuesday, right here, it was the previous day's range low. Here's your middle and top. We had a very strong move. We had 2 beautiful rejections at the bottom third. Those were your trades going long right here, and high probability because the main trend is up. Beautiful. Wednesday, your best trade right here, that was clear, was definitely counter trend right here. Otherwise, this was just chop right here. No business trading that. And again, remember, we have the same 6 to 8 symbols. So I'm going to focus in, of course, on the one first. The main trend is up. I'm going to be focusing in which one has the best bullish trades. If the main trend is bearish, I'm going to focus in on which one in the short term has the best opportunity to short. And if the overall main trend is a range, then no problem. I can take both sides. Again, these are things you learn to earn the right to trade live, but I also talk about them every day. All right, so S&P, looking back on right here, this was a beautiful right here, bottom third trade right there. Okay, so that was a beautiful setup right there. And then here was counter trend, but that was the high probability. All right, let's go to Friday action. As I mentioned, the overnight traders right here. And right here was a beautiful setup long. It hit beautiful target right there, because what do I talk about? Whenever we go above or below the previous day's range, we know that the bullish momentum, and then we look at those weekly, monthly, and yearlies, and that's what we hit. And then price came back into the range, but that was your setup if you're trading the session we do. All right, let's go to NASDAQ. Let's go to the weekly. Again, this is our review. So again, and then I'll be back Monday morning to then break it down. What is our plan? That's the beauty of what we do. Rinse and repeat, build our plan, execute our plan, post-market journal review, and then we do our weekly and monthly reviews. All right? Now, if you have questions, you hit us up at hello@trade90x.com. We're moving lower left to upper right. Where are the areas where the red and green candles are most obvious, where price is now taken off right here and here? Let's go to step number 2. So again, on the weekend, it's more lesson and market overview. Look at the week, and you can see we've kind of been in a range. Let's go to that 5-minute. Let's break down the week. Again, main trend is up. Where's the best trades? The highest probability is always going to be in our longs, and we want movement and rejection. I do not want chop. So really, for me, right here, this was a counter trend trade because, again, main trend was up, but we broke below the previous day's range low. So you know the rules on that. Here was a beautiful going with the trend on Tuesday. Beautiful, beautiful trade right there. All right. Wednesday, nothing. Okay. And that's, again, you have to be able to identify. Look at this. It's just chop, nothing to trade. All right, so Thursday, beautiful trades right here, went with the trend. Beautiful trades right there. All right, and then on Friday, you had basically overnight traders had no edge, and then coming into the US, you had a counter trend situation trade. That was the high probability, and you know my rules on counter trend trading already. So if you don't ask questions, okay, now that let's go look at the Dow. Same thing. What did the Dow do? Let's see here. Let's break it down, get this off. All right, so this is what I was talking about. We do have more of a bull bias. We're moving momentum, but now we are sitting in consolidation because we have a sideways range. We boxed at the bottom, equal bottom and tops right here. All right, so again, if I was a bigger time trader coming in from a bullish momentum, I'm looking at bottom third, fake out breakouts until price breaks out. All top third trades, if we break down, would be more counter trend. Let's go to 30-minute. Here is the week, and you can see that all the indices were kind of range bound. Let's go to the 5-minute, step 3, get more structure. Let's see what the week brought. So here was Monday. Okay, main trend is it's more bullish bias, but we're in consolidation, so I don't have a problem going both sides. Overnight traders got paid, and we had an opportunity for a long here. On Tuesday, we had the previous day's range high, midpoint here. I don't trade the middle, so not for me. We go Wednesday, fake out breakout right here. Beautiful trade long. And mostly in the middle right here, nothing great. And here was counter trend. And again, because the main trend right now is in a range, I have no problem. That's a beautiful trade. We did a round trip, meaning we went from fake out breakout all the way to the other side, middle and bottom. And I've had another fake out breakout, but beautiful trade. Again, all you need is learn the statistical edge setups, and all you need is one good trade per session. All right, let's go to the Russell. Step number 1, go to the weekly. So we determine the main trend, and you can see the Russell has been in one big range. Let's get in there and squeeze up the equal highs, equal lows. We can see that sideways range. There we go. So again, what do we do with the main trend is range? If we're shorter term traders, we can go both sides. But here, if I'm a longer term trader, I'm looking to potentially fade this trade down. Because again, when you're in a range, top third, bottom third, fake out breakouts at the top or bottom until price can prove it can break above or below. All right, let's go to the 30-minute. All right. So what do we got going on here? I'm going to put this here. That up there. Okay. All right. So what is the Russell doing? Like the other indices, kind of a sideways range. Let's go to the 5-minute. Let's review the week. All right. Because it was a range, I don't mind going both sides. So here we went from an inside to an outside day. Beautiful long right here. Tuesday, not much, because again, I don't like trading in the range, in the middle. Here we had kind of chop, nothing. Nope. And here in the middle, and then we broke out right here. So if you were an afternoon trader, definitely had a nice long from an inside back to bullish momentum. And here also overnight trader, beautiful bullish momentum trade, hit target. And then US session, not great. All right, so let's go look at a few other symbols now that we trade. Let's go to oil. Again, I'm breaking down all the symbols that we look at. I don't care what symbol it is. Again, let's take this off. What is the main trend? And you can see main trend is more in a range. Let's just get in there, find those equal lows, equal highs. There we go. And what do we do with ranges? Bottom third, top third, fake out breakouts, never trade the middle until price can break above or below. And again, the main trend on oil is in a range. Let's go down to the 30-minute. You know, those decision points are our bigger range. What has the week been doing? Basically sideways. Let's go to the 5-minute so we can get a little more structure. Let's go look at Monday. So remember, when the main trend is sideways, we can take both sides. So overnight traders and US traders got paid here. Beautiful trade for the US traders short using our tools, understanding, bullish momentum, bearish momentum, range setups, top third, bottom third, fake out breakouts at the top and bottom, never trading the middle. It has to be the more obvious, the higher the probability. On Wednesday, right here, there we go. Beautiful. Right there. Rejection. And then we came back in. Beautiful long. I don't trade the middle. Choppy. No. And here you had the overnight traders. Bullish momentum. Couldn't hold. And then we came back in right there. Beautiful. So both overnight and US got paid. Let's go to gold. Let's go to the weekly. Again, it's rinse and repeat. I don't care what symbol you show me. All right, what has gold been doing? Main trend. Hopefully you've identified this long-term 4-year range right here. Get equal highs, equal lows. Let's put the expansions on. There we go. And now you can see we broke out, and now gold is back into sideways consolidation, but more of a bull bias, but again, range. All right, let's go to the 30-minute. And we've got all our decision points, all our previous day's range, weekly, monthly, yearly high. What has gold been doing? And we can see kind of ranging. All right, let's go to step number here, 3. Let's go look at Monday through Friday and analyze. So again, it has more of a bull bias, but definitely was in a range consolidation. So I don't have a problem taking both sides until that main trend breaks back to bullish or bearish momentum. So overnight traders definitely had a trade here. Let's see here. Remember, gold opens at 820. This was definitely a beautiful trade right here. That was the trade right there. And this was the trade here on a Wednesday. We went from an inside to an outside day. Beautiful. And look at that. Hits the targets monthly, weekly. Beautiful. Thursday. Here was your previous day's range low. Here's your open. You had a monthly, yearly. It consolidates right in the bottom third. Beautiful trades right there. That was it. That was your trade. And then here, Friday, nah, this was just chop. Chop, chop, chop. Nope. No interest. Okay, let's go look at Bitcoin. For you Bitcoin traders, again, doesn't matter what asset class. Let's go to the weekly. All right, let's do what is it telling us? Well, look left. Look at that, bullish. Snapshot that. Whenever you see this above or below, this is telling you high potential for reversal. And then we went bearish. We consolidated, moved lower left up right. We do have more of a bull bias. We did break slightly above the high. You can see that. But right now, we're in consolidation. What do we do with consolidation, especially if it has more of a bull bias and a bigger time frame? Again, my favorite trades, if I'm a longer term trader, bottom third, breakout until price can break out. All right, now shorter term traders, rinse and repeat. Let's go to step 2, 30-minute. And we can see we've got this bigger range happening right there. So if you want to do this, no problem. All right, so what has the week been doing? And remember, as I do this right now, Bitcoin trades 7 days a week. So again, we had this really, we had this rejection, but then we went into a range. So let's go to 5 minute so we can see more structure. Let's go to Monday. And let's go through each day here. Now, again, we do have consolidation. So again, until it breaks back to bullish or bearish momentum, I don't have a problem going both sides using our tools. So Monday, overnight traders had multiple top third shorts. All right, Tuesday, kind of in the middle, nothing to really trade here. All right, overnight traders definitely had a short. And right here, beautiful long at the bottom third, range day, nothing to really do yesterday and Friday. And right now, this was a long right here in the bottom third. You had the previous day's close open right here in the bottom third. First target be middle and then top. So right now, if you're looking somebody who trades Bitcoin in the shorter term, it's a range day. It's consolidation in the main trend. So I'll be looking at this bottom third rejection to go back to the middle of top. Top third rejection to go to the middle of bottom. Fake out breakouts to go to the middle of top. Fake out breakouts go to the middle of here until price can break out and give us clear bullish momentum, clear bearish momentum. All right. So that's Bitcoin. All right, let's go do a few stocks here, the top ones. Let's go do Apple. Same thing, go to the weekly. All right, tell me what Apple's doing in the main trend. Momentum into a very long consolidation. And now we broke out. So we are bullish, and now we have a pause. Let's go to 15-minute chart. Let's see what the week did. And we can see over the last kind of 2 weeks, we had bullish momentum. And now we have sort of a sideways range here. All right, let's go see what this week brought here. Well, let's go down to like a 3-minute. All right, here we go. So here was Monday. Remember, we are more of a bull bias. So definitely going with the trend. The highest probability is long. We had a bottom third. There was your trade. Now, again, if you're somebody who does have the right to counter trend, there was your trade right there. It was a range day. Never broke really to bullish momentum, bearish momentum. We had 2 fake out breakouts. Tuesday, I hope you told me that you did nothing on Apple on a Tuesday. That's where you lose money. Wednesday, beautiful, had very clear right here. We had a break above the open and the previous day's range, bullish momentum. There was a bullish trade. Again, Thursday, not a great trading. You had this counter trend, but really not a great trade. And then also here, you had a counter trend day here. Right here, top third right here, and it did a round trip and that actually broke lower. All right, let's go to NVIDIA. Yeah, let me clear this off. Step number 1, go to the weekly. You're looking for the main trend. We know NVIDIA has been bullish. It's been moving lower, left, up, right. Where are the areas where the red and green candles are obvious, where price paused, took off? Here and here. Let's go to step 2. And now we have our tools. What's been going on during the week? Kind of a range after a big kind of a pullback from the week before. This week was kind of a range. Let's go to the 3 minutes, see what Monday brought. All right, so here was the Monday. Monday was definitely counter trend. Here we had more of a bullish day right here. We broke above the previous day's range. And Wednesday was crap. Not much movement here. I mean, this was counter trend. This was kind of chop. And then here, break and retest right here. And the open actually gave you, so those were the trades right there. And again, going with the trend, getting in sync is always going to be the highest probability. Counter trend is always going to be lower probability. And you know my rules for counter trend trading. Let's go look at one or two more. Let's go look at Meta. All right, weekly, same thing. What is the main trend? It has more of a bullish bias, of course, lower left, all right, but we are, you can see we're kind of in this consolidation. Let's go down to the 15. What did the week do? And we can see we've kind of been in a bullish bias and then kind of in a range. Let's go to the 3-minute. And this was Friday, Thursday, Wednesday, Tuesday, Monday. Again, remember you have more of a range bias. So remember, with ranges, until it can prove back to bullish, bearish momentum in the main trend, I have no problem going both sides using our tools. And here we had counter, we had those shorts. Here we had the long at the open at the bottom third. Here we had no edge whatsoever. It just went sideways. Nothing here, I would say Thursday. And then, yes, very nice failure. And we went into bearish momentum. So again, because the main trend is in consolidation, I don't mind using the tools to go both sides. All right, let me do one more. We'll do, let's see here. Let's do Amazon. There we go. All right, weekly. All right, so we can see Amazon has been bullish, and now it's trying to break out. Went into consolidation, it's trying to break out, but kind of it's kind of failing. Let's go to the here. We have a yearly and monthly right there. Take that off. So we have a yearly and monthly. You know that's important. So if we look back, we've been bullish. We were bullish this week, and then we rejected. So let's see, Monday, Tuesday, Wednesday, Thursday, Friday. Let's go here. All right, so this was Monday right here. And again, we're in that consolidation until we really prove we can break out. So what did I say? I don't mind going both sides. There we failed at the open at the top third. So nice short intraday. Let's see here, Tuesday, bottom third, rejection at the open, then kind of failed. Here we broke out. As soon as we broke out above, we had that bullish momentum day, beautiful follow through. Then we got the break and retest above right at the open, and that was a beauty right there. And then look at where price hit your monthly, yearly. And then this was Friday, right here, previous day's high, middle right here. So it turned out to be more of a bearish range day. All right, so let's go back. Let's finish this up. All right, let me put this back here. So again, every single day, it's about the same thing. It's about, number one, understanding the rules of engagement, understanding our numbers, understanding that our strategy has been back tested over a period of time to have an edge. We mastered bullish, bearish, and range price action. We master what the setups are within a bullish, bearish, and range. We understand the main trend versus short-term trend. Okay, we understand the three-step process. I broke down the top down weekly and monthly is your main trend, 5 minutes, say, to a daily, using your short-term trend. And again, we understand that. And I showed you a way to also break down that weekly, daily chart on how we use to look for setups, and then using anywhere between that 5 and 60-minute or 30-minute, using the tools that are predictive, not lagging. These help us quickly help determine whether we're bullish bearish range. And as we talked about on ES, this week was more of a kind of a range day, and then we kind of closed inside the range on Friday. And then again, the main trend on the S&P is still up. The short-term trend is kind of ranging right here. So remember what I talked about. Again, if we have, short-term ranging, then what it'll allow me to do is, again, the main trend is still up. So the highest probability is going to be long on the S&P. Anything short would be counter trend. And again, you know the rules for counter trend. I've talked about it multiple times. Now, if you have questions about any of this, how we broke down the review, the data we look at, the strategy, how we can break down any, chart or any asset class to figure out our game plan, then just hit us up at hello@trade90x.com and go back and enjoy the rest of the weekend. And then I'll be back Monday morning to break down the morning review.